How much lift you got, Bill? You buying it with both hands right now, or not?
You know, Joe, this is one of the great junctures. You know, growth has been tarring and feathering value for years, and now we've reached the crazy stage where businesses that are losing money very quickly are being valued at multi-billion-dollar levels. So
that's a no.
Yeah, that's a no.
That's a no. But okay, but you led into your value proposition. So what Wells Fargo represents value to you at this point? You like that stock?
You know, John Templeton said, when you can see the light at the end of the tunnel, it's too late. And this is a banking business that has a lot of really good control over the depositors, and also has excellent mobile banking technology, which means that they have a good relationship with the millennials that will drive, you know, the spending the next 10 to 15 years. What it doesn't have is a leader that can get along with regulators and contribute to the improvement in morale that needs to happen for them to be as successful as they need to be. But at 9.7 times earnings, you know, that's a pretty darn good risk-reward relationship.
All right, that's one. How about Home Depot? What is your thesis for the home improvement chain?
You know, it boggles my mind that, you know, Costco's worth 28 times earnings, and Home Depot is going to have Costco-like success, we believe, over the course of the next 10 to 15 years, as the largest population group participates in household formation and home ownership. So one of two things has to happen. The homes in the United States are 45 years old, the oldest they've ever been on average in U.S. history. So they're dilapidated. They badly need a lot of facelifting. And then secondarily, we have a lot of homes to build because there aren't enough homes right now. There are in Manhattan, but there aren't in most other places because the homes need to be affordable for in that 300,000 to 500,000 range, and we got to build a lot of them. So I just can't imagine that it's not going to be a great era for Home Depot. And why wouldn't they, after a couple of decades of 10+% compounded earnings growth, why don't they get the multiple that these other folks get?
Okay, and then Target, not an under-owned name. I mean, everybody's heard of it, obviously. Why Target? That seems like people know that story.
Well, Target is a comeback story that's about halfway through the comeback. You know, they had a terrible mess up in Canada, you know, 4 or 5 years ago. And what they've done now is they've narrowed in on dramatically improving the stores and making them themselves the most friendly to the shopper that's shopping both online as well as coming to the store. So there's an amazing amount of brand affection there. And then, of course, mathematically, again, there's 45% more people going to be in the 30 to 45 range than there was the last 10 to 15 years as the millennials replaced the Gen Xers. And that is going to put a lot of moms and dads with 1 or 2 kids roaming through that store.